Welcome back to Explain the Charts, everyone. Today, August 10th, 2025, we are witnessing an exhilarating period for Ethereum, or ETHUSD, with the market captivated by its recent impressive rally. Just hours ago, headlines reported Ethereum surging past $4,200, its highest level since December 2021, driven by substantial institutional interest and significant on-chain accumulation. Major players like BlackRock are reportedly acquiring large sums of ETH, signaling strong strategic endorsements and injecting billions into Ethereum-based products. This surge has also triggered over $356 million in short position liquidations as ETH crossed the $4,100 mark, indicating a powerful shift from bearish to bullish sentiment among traders. While price targets of $10,000, $12,000, or even $16,000 are being floated by analysts, it's crucial to remember that these are contingent on sustained institutional support and overall macroeconomic stability. However, it's also important to note the recent warning from Ethereum co-founder Vitalik Buterin regarding over-leveraged ETH corporate treasuries, which could potentially destabilize prices. Now, let's turn our attention to the charts to see how these fundamental shifts are reflected in the price action. We'll begin with the one-day chart to gain a broad perspective on ETHUSD's movements over the past year. Looking at the daily chart, we can clearly see the significant upward trajectory that ETH has been on, especially in recent months, culminating in its current price above $4,200. This long-term trend indicates robust buying pressure and overall market optimism. However, not all movements have been smooth, as evidenced by notable dips throughout the year. Observe the dramatic plunge around early August 2024, specifically on August 5th, where ETHUSD experienced a massive flash crash. The price briefly touched an extreme low of $1,911.81 before recovering significantly within the same day. This event, despite its severity, demonstrates strong underlying demand as buyers quickly stepped in to absorb the selling pressure, pushing the price back up. Let's zoom in on that specific flash crash on August 5th, 2024 on the one-day chart. Notice the long lower wick on that candle, reaching down to $1,911.81. This long wick is a classic sign of a strong rejection of lower prices and immediate buying interest, often indicative of an oversold condition or a liquidity grab by large players. The rapid recovery suggests that this level acted as a very strong, albeit temporary, support. This type of price action can be extremely volatile for short-term traders, but often confirms underlying strength for long-term investors if the recovery is sustained. Moving back to the broader daily chart, let's identify key price levels. We can see a clear resistance zone around the $3,800 to $4,000 mark that ETH struggled with for several months, particularly from late 2024 into early 2025. The recent breakout above this resistance is a highly bullish signal, suggesting that prior selling pressure at these levels has been overcome by new buying momentum. This former resistance zone now flips to become a critical support level for future price movements. On the downside, key support levels can be observed around $3,000 to $3,200, which held firm during several pullbacks earlier in the year. For short-term traders, this means if ETH were to retrace, a bounce off these levels would reinforce the bullish outlook. Conversely, a sustained break below them would signal a potential bearish reversal. Now, let's shift to the one-hour chart to examine more recent, granular price action. Please keep in mind that our one-hour data set ends around 2 weeks ago, so it won't reflect the most immediate movements leading to the current $4,200 price point. However, it still provides valuable insights into shorter-term trends and volatility experienced during that period. In this time frame, we observe a general upward channel with some consolidation periods, showing a steady accumulation phase before the recent explosive moves. The candles show relatively balanced buying and selling pressure during this period, with moderate volume. The smaller timeframes often reveal early signs of trend changes or accumulation/distribution before they become apparent on daily charts. Drilling down further to the 15-minute chart provides an even closer look at intraday dynamics, though this data also predates the latest $4,200 surge. This view shows tighter ranges and more immediate reactions to market sentiment, reflecting how buyers and sellers interacted minute by minute. During this period, ETHUSD maintained support around the $3,600 to $3,700 range, indicating consistent demand at those levels. High-volume spikes accompanied by significant price movements, whether up or down, are crucial indicators here. A sudden increase in volume on an upward candle suggests strong buying interest, while heavy volume on a downward candle can signal capitulation or profit-taking. Traders often use these short-term charts to pinpoint exact entry and exit points, looking for candlestick patterns like hammer candles at support or shooting stars at resistance. Bringing it all together, let's summarize the bullish and bearish arguments for ETHUSD. Reasons to be bullish: the overwhelming institutional accumulation, confirmed by recent reports and ETF inflows, provides a strong fundamental backing. The decisive break above the multi-month resistance at $3,800 to $4,000 on high volume indicates a strong continuation of the uptrend. Aggressive short liquidations further fuel upward momentum as bears are forced to cover their positions. Layer 2 adoption and real-world asset tokenization advancements continue to strengthen Ethereum's utility and ecosystem. Reasons to be bearish or cautious: Vitalik Buterin's warning about overleveraged treasuries highlights a potential systemic risk if market conditions rapidly change. Any unexpected macroeconomic downturn or significant regulatory action could trigger swift pullbacks. Profit-taking after such a rapid ascent is always a possibility, leading to short-term corrections. And remember, past performance, especially during flash crashes like the one in August 2024, reminds us of crypto's inherent volatility. So, when deciding when and what price to trade, always combine fundamental analysis with technical indicators. Look for sustained volume accompanying breakouts or breakdowns and confirm price action with multiple timeframes. For short-term trades, monitor immediate support and resistance, such as the $4,000 level, which should now act as strong support. For long-term investors, watch for ETH to maintain above the $3,800 region, confirming its new higher base. To recap the important price levels and unbiased predictions. Current price area * around $4,200. Immediate strong support * $4,000, formerly strong resistance. A sustained hold above this level is highly probable, perhaps 70% likelihood given recent momentum, reinforced by continued institutional inflows. Next key resistance / potential target * the all-time high around $4,891.70 from November 2021. Reaching this is moderately likely in the short to medium term, perhaps 60% probability if the bullish sentiment and institutional interest persist. Long-term targets * projections towards $10,000 to $16,000 are highly speculative, but gain likelihood if Ethereum continues to innovate, expand its DeFi ecosystem, and if the broader crypto market enters a prolonged bull cycle. Critical lower support * the $3,000 to $3,200 zone. A drop to this level is less likely in the immediate term, 20% chance, unless there's a significant external market shock or a major shift in fundamental news. What to look for next * keep a close eye on further institutional announcements regarding ETH ETFs or large-scale acquisitions, as these have proven to be significant catalysts. Monitor global macroeconomic indicators, particularly inflation and interest rate decisions, as these can impact overall risk appetite. Finally, watch for any significant changes in network activity or major upgrades to the Ethereum blockchain, which could provide additional utility and drive demand. Thank you for joining us on Explain the Charts for this in-depth look at ETHUSD. Trade smart, stay informed, and we'll see you in the next analysis.